Hi, it's Jo and Steve from Fresh Agenda. And Steve, it's always a good week when you've got a positive GDT to talk about.
Yeah. So people would say that the result is mixed. When you see that chart of the changes in price there, it is quite mixed and pretty bad as you go further to the right. But I think the strong result in skim milk powder across the board in contracts is probably the biggest takeaway from this.
Yep.
And in a background against a background where we've seen US prices rise quickly and European prices stabilise and start to move up again. Better sentiment in those regions about the fact that we've seen the worst, demand is coming back, and the threat of more milk moving to dryers has probably passed a bit, so that's not as strong. This event came with some of the strongest demand we've seen. So GDT reports a measure of demand strength, which is a demand supply ratio. So this one's right at the top of the scale, the second highest since they started reporting this. So that's very positive to take away. I think that's the strongest indicator here. And then when you look at what actually happened as well, better for European products. So the Arla range, different sources in Europe, performed quite a lot stronger, nearly $100 better than Fonterra in terms of gains. So interesting result when you dip into that. That's quite positive. We expected it to go up, given the northern movements, but a little better than expected. Whole milk powder, you had to dig under the bonnet to get the real info here, because the headline numbers are a bit misleading. There is a mix of different product types and specifications. So the instantised product, which tends to have a much higher unit price, that behaved differently to the last event. So when you strip it down and get just to the regular product, it was a positive result, because as you can see there, the later contracts did better and picked up.
So that apples comparison
is a better one to do. And just throwing up there a couple of the regional participation indicators. So North Asia involved in whole milk powder was a little stronger. Southeast Asia, sorry, I'm showing this skim milk powder there.
Yes.
Good pick up. So interest in China, of course. China was participating strongly, not as much as it could have. I guess whole milk powder was weaker, and we know the reason why. There's more stocks in China that may be the cause of that.
That's right.
Cheese is the one that's also interesting, with the US market's recovered and gone past in terms of spot prices other regions. So it's gone from the cheapest 2 weeks ago to the most expensive.
Yeah, it's quite a rebound.
Yeah, the futures
like
market.
Dennis Rodman.
Like Dennis Rodman, yeah. For those watching Last Dance, as we are most nights.
Sorry.
The short-term futures prices have lifted as well, so the futures profiles look a bit odd when you do a 2-week comparison there. So that's set for an interesting dynamic as we go later in the year, as to, whether those US prices stick.
Sure.
Europe has remained stubbornly below 3,500. But it's still an interesting situation to watch.
Yeah, and obviously cheddar very important for this part of the world.
Absolutely. Speaking of this part of the world, good segue there.
You're so welcome.
We've just updated our milk price outlook for the Australian season. This won't be terribly interesting to those in the Northern Hemisphere, but stay watching, because it is interesting. We've seen so as we do this each year at this time as we start a new season. We're a bit over a month away from that, and a lot of interest in obviously where that price pitches, given what's happened in the Northern Hemisphere and given what's happened in this market with COVID.
Absolutely. And also, just for our overseas watchers, we also have a mandatory code that's coming into force with pricing announcements this season. So there's a lot of noise around where things are going, given all that, isn't it?
Yeah, that's right. So in our Global Dairy Directions platform, we do product forecasts for this part of the world, and as you can see, our average of where the current season finished versus next season shows quite a step down in price expectations for the commodities. The other important thing, probably the harder thing, are the currencies.
Yeah, which we're not claiming to be experts on. So we're taking consensus forecasts basically from some of the major banks, etc.
That's right. And that shows where those consensus forecasts are and how wide they are as you go further down the track. But 65 is about the middle. It's also where futures are at the moment. So $8 futures are about that level. So that's our range, given that there is a wide range of possibilities that could come. Where that leaves us is a midpoint in what we call the commodity milk value of $6 Australian per kilo. That is well down on where this current season finished. And as you see there, that difference is around 45 cents. Yeah. 43 to 45 cents. It's interesting to note, we always flag in this market the difference between the milk price and the commodity value. Yes. That has been higher in recent years. We've just calculated that to be 45 cents a kilo. We expect there may be some pressure, some downward pressure on that if consumer spending slows and there's more drift towards lower value retail products. At the same time, though, we don't think farmgate competition will
let up. No, not at all. Yeah.
So that gives us a milk price range quite wide.
We're giving ourselves a wide range, given all of that that preface of COVID, market uncertainty, and the rest. So wide 50-cent range there.
So if people are interested in the detail on this, email us on the email address at the end of this presentation for a bit more detail and the workings behind it.
Yeah, because it's important to note, as you said, we forecast commodity prices. We project values based on the fundamentals that we think will be in play. So it's really important, obviously, to understand all the assumptions that underlie a number.
So I should also note, this is for manufacturing milk use.
So not fresh milk processors.
That's right. And there are plenty of niche players in this market, brokers and domestic players who will pay above that range as they are in the current environment.
Yep.
Okay. Brings us to the chart of the week.
Back to the Northern Hemisphere for the chart of the week, Steve.
Okay, so what have you got?
Well, given that actually you chose it this week, maybe you would like to talk about it.
Skim milk powder exports out of Europe. Europe has posted its trade data over the weekend, and it shows just the decline. So the couple of things happening here, that those supply chains were stuffed last year with a lot of cheap product.
Yep.
We think that's run down quite well, and then there's some disruptions during February and March due to slowdown of trade because of
COVID.
Because of COVID,
yep.
Gets mentioned a lot.
It does.
So this is possibly the last month of the bad news on the decline in trade year on year, because the word is that trade has picked up quite a bit, whether it's in April, but certainly in May we should see those numbers turn around. Prices have become far more attractive.
Yep.
We've seen that in GDT. We expect to see that in general trade. So that's an interesting, but this will affect balance sheets, and it's an interesting setting for looking forward that we've had worsening exports across most commodities.
Absolutely.
I think in overall terms, while the EU was down a big chunk, I think global SMP trade was down 15% in March. So we are looking at some pent-up demand that is currently surging.
Absolutely, which we're seeing in GDT.
All right. Well, that's all from us. Thanks for watching. There's that email address and phone numbers if you want to get us. We'll see you next week.